welcome to Wire Talks. In one of my first training sessions when I started my investment advisory, I was apprised of the quote, risk comes from not knowing what you're doing. This was from none other than Mr. Warren Buffett himself. This is a basic, yet such an important rule when it comes to making any decision, let alone investment decisions. The key point here to note is that risk is not inherently negative, especially in the realm of investments where there is risk, there is a potential to make a higher return, a return higher than the market returns or the risk free returns. The issue arises when we are unaware of the risk or the potential downside, as the upside risk is always welcome. When we invest in any asset class, equities, bonds, currencies, real estate, we invest with a long term horizon, don't we? However, this horizon is often forgotten when the markets take a turn. We invest today, and if tomorrow the market corrects, we panic, leading to what Buffett said, risk comes from not knowing what we are doing. Understanding the risk is crucial to avoid such panic and stay in control of our investments. Look at the past few years. The central bank raised interest rates. We had a major regional conflict, and the central bank yet kept raising interest rate. We had another major regional conflict that keeps going on still, and some key central banks are still raising rates. A rational mind would have expected equities to correct, but capital markets are known to behave irrationally, and there was a lot of upside risk to be taken during this time. Currently, the risk is being complacent, expecting markets to keep making higher highs and completely forgetting or ignoring the risk. One event and the markets combine all negatives to validate a correction. On a separate note, I will share a personal example. A few months back, a couple of my family members were down with COVID. I worked from home for a couple of days and then was back in office, of course, after taking the normal antigen rapid test. What was the risk here? Me passing the infection to others? Or instead, me getting the infection from someone else, thinking I got it from my home? The situation is similar to investment risk, in that we often think we understand the risk, but it can still surprise us. Thankfully, I didn't get COVID then, though it did hit me a few months later. That's how risk is. It can play out in any fashion and at times when it is least expected, specifically when it comes to investments. It is essential to understand how bad the downside could be, so one is not blindsided, but instead prepared for it and possibly take advantage of it. One way to do this is to stress test the portfolio. However, remember, seeing the numbers on paper and the portfolio actually going through the correction are two entirely different experiences. And when investors use leverage to enhance returns, it becomes even more important to know and understand the risk. The more significant issue of not knowing what you're doing is the risk to our goals, retirement, kids' education, house purchase, or any other important event, goals that will not change come what may. So it's important to know the risk, but not to fear it. If we are still afraid of the risk, then it's best to stay away. However, with proper knowledge, understanding, and guidance, we can navigate the risk and potentially reap the rewards. And now it's trivia time. Do you know which is the oldest central bank in the world? A hint? It's a wordplay around today's topic. Don't know it yet? Well, it's the Swedish Riksbank, established in 1668. If you like the video, please share, subscribe, and press the bell button. And keep watching for more on Wire Talks. Thank you.